Hey traders, welcome back to the J brand, where we don't chase trades, we let POIs do the heavy lifting. Today I'll be breaking down points of interest in Forex, what it really means, how to spot it, and how to stop entering trades like a confused tourist. Stick around, this one might just fix your entries and your trading confidence. Remember to show your support by smashing the like button, subscribe to this channel if you're new, and let's get started. Now, without wasting much time, we are going to be talking about POI and the two types of POI that I will be revealing in this video, which are the Quasimodo reversal, also known as the QMR, the order block, which is the OP. Okay, and I'm still going to use one stone to kill two birds by showing us a little bit of top-down analysis and exactly how I trade. Okay, now let's head straight to the template. What we are going to be expecting, as usual, my normal way of trading. For into how I trade, we want to have a swing structure, right? Break of the recent high, incomplete pullback, and then we have this. So this is exactly how I trade. This method is also applicable to the sell model. This is for the buy. This is a buy model. Okay, and then this happens to be our protected low. That is, we are not expecting price to come beyond this low. And then we have our sweep of the recent low. We have our break of the recent high, another break of this high, which is also known as transactional liquidity. And now, to validate our structural liquidity, refer or go back to my previous video where I discussed structural liquidity and how to validate structural liquidity. To validate your structural liquidity, simply use your FIB tool, take it from the protected low to the recent break of structure. Your structural liquidity must be inside the 50% area of your swing structure. It must be in this discount area for a buy model and must be in the premium area for a sell model. So I must have my structural liquidity within the discount area of my swing structure. If it is not within that discount area, that means it is really not going to be valid. Now you can take off your FIB tool. This low is protected. This happens to be my structural liquidity. I want to always see price take out my structural liquidity before I consider buying that market. Now for the QMR, the Quasimodo reversal simply means the last bearish candle that failed. It's still an order block, but it failed to hold. Okay, the last bearish candle that failed, which is usually around this area, okay, and unmitigated by the structural liquidity. It must not be mitigated by your structural liquidity. Okay, now in a case where the structural liquidity has probably mitigated our QMR, something like this. Now this the mitigation of this QMR by our structural liquidity has rendered the QMR invalid. So in that case, we are going to be looking for the next POI, which is supposed to be our order block that has not been mitigated. Okay, now assuming the QMR has been mitigated, we look for an unmitigated order block within the same discount area of our swing structure, and then we get our position to right above the order block or the QMR, and then you target this high, but I normally target 1, 2, 3. So this is everything we'll be talking about in this video. We are going to head straight into the chart. Where I show us practical examples, trade I took, how I shared the same trade in my Telegram community. Do well to join my Telegram community. It's really going to be of good help, and then of great help rather. It will sharpen your your edge, and of course you gain. It will be more advantageous to you even as a beginner or a professional trader. So this is what we want to talk about, and then let me take this off. So as I usually trade, I start from the higher time frame, which is giving me a bird eye view of what is happening in the market, right? I want to make sure I am on the right side of the market. I want to make sure I am correctly following the trend. So in that case, I'm always starting my analysis from the higher time frame. Now I can see a very valid break of structure to the downside, and then I have this as my highest point, which is, I'm looking at this point as an area that should not be invalidated, and then I have this range. So on the monthly time frame, I am looking at this range to take my order. But price has already told me, because as a trader, it is your duty to understand the story or the clue or the clues in the story that the market is telling. I have seen that this market is bearish, so I am actually waiting for price to get to a discount area, probably around somewhere here, and react to an area of value, and then pushes back to the downside. But before then, I want to interpret the price action on the weekly time frame. I want to get to know what price is doing on the weekly time frame. So this has brought us to the weekly time frame. We can see the bullish trend. We have the higher highs, the higher low. We have this high like this, and then we have this high. So, and then we have this high. So I want to look at this current structure to get my trading opportunity. This is the second time I'm recording this video, because the first recording was not saved, so I might have skipped some stuff, but let's just follow up properly. Now I am seeing this recent break of structure. Okay, I want to make sure I am on the right side of the market. I'm seeing this recent break of structure. I'm seeing this area that should be protected, right? I'm seeing this area that should be protected, and then I'm seeing this highest point, okay, and I am seeing a reaction. I am seeing a reaction. This is practically and exactly how I trade. That's actually eased my trading journey, and it has helped me refine my edge properly. Now this is an example of an order block. It's more or less like the primary auxiliary order block. This is an example of an order block. Okay, this, I actually saw this reaction, okay, from the weekly time frame, and that got me more interested to scaling down to the lower time frame to see what price is actually doing. Okay, this is how you always want to trade. I'm more of a reactive trader. I trade reactively. I don't trade aggressively. I don't really, even though you really cannot tell the full direction of the market, but this helps solve your problem, your trading problem, by 70%. Okay, I am seeing this order block that is giving me the confidence to want to check this reaction on the lower time frame. Now I'm going to scale down to the lower time frame to see why price is reacting this way. Okay, now let's go to the daily time frame. Okay, and then to the 4-hour time frame. Now I have confidence to continue my analysis on the 4-hour time frame because I have already seen what and why price is reacting, what price is reacting to, and why price is reacting to that weekly order block. Okay, now I have seen the first swing structure, which is this. I can see this sweep. Please, let's pay good attention to this. Like I said before, it's just going to boost your confidence if you understand how to trade this way. And then I am seeing this low, and I'm seeing this recent break of structure. Price has shifted to the upside. Then I am seeing my incomplete pullback, which is my structural liquidity, my premium price, my premium subscription has expired. I would have actually cut price, but I think it's still going to be clear enough. Let's just follow up. Now this is an example of, okay, this is a very good swing structure. If you don't understand what a swing structure is by now, you can refer to my previous videos. Are you seeing the sweep of this low? And then we have an incomplete pullback. This is the first pattern of structural liquidity, and then we have this break. So I am waiting or hoping that price, patiently waiting for price to come take out this structural liquidity or incomplete pullback and then head to the upside, because price has, or the market has already given me a clue that, hey guy, listen up, I'm heading up. You understand? So it's as simple as ABC. Okay, now I met, when I actually saw this swing structure, price already played out. Okay, and then I saw another opportunity. Now I want to explain this QMR. Look at, I said QMR is your last bearish, for a buy model, your last bearish candle, more or less like an order block. This is an order block that was supposed to hold, but it failed. Okay, look at this sweep. This candle swept this QMR, this order block, and because it was reclaimed, it has automatically changed the status of this order block to a reclaimed order block or a Quasimodo reversal block, like a QMR. We have QMR, and then we have QMC, which is, QMR is the name should not get us confused. This QMR simply means it is happening at the point of reversal. QMC simply means it's happening at the point of continuation. Now we can see that this QMR has been mitigated by our structural liquidity here. You see, it has been mitigated by our structural liquidity. So it will be highly unprofessional, or yes, it will not be okay for you to probably take your position to and make your entry to be on this region, because the QMR has already been mitigated. So in situations like this, what are you expecting to do? You are expected to neglect that QMR that has been mitigated by this structural liquidity and look for an order block that has not been mitigated. Now I see another block, which is this week-based order block. If I scale down to the lower time frame, I might see a full candle order block. Okay, and you can see that is where price reacted from. You see how price reacted from the order block, because this QMR has been mitigated by this structural liquidity. Now here goes my opportunity. I shared this setup on my Telegram community. Do well to join the Telegram channel. People made money. It's free of charge. Learn from my setup, on my setups, sharpen and refine your trading edge, and I believe you definitely become profitable. Now I can see another swing structure. You can see this. I have more confidence in this trade because of where price is reacting from a weekly key level, that is a weekly order block, and then I can see this incomplete pullback, and then I can see this recent, this is the second break of structure, right? So I can actually see that, and that actually gave birth to the next opportunity where I actually took the trade. And in this case, we have here as our protected low. Okay, price is not supposed to come beyond this low, and my QMR here is still very fresh. Like I said before, your QMR is the last bearish candle for a buy model, last bearish candle that was swept and then replayed. For a sell model, is the last bullish candle that was swept and reclaimed. Okay, then I see my recent break of structure here, right? Recent break of structure, which is also known as transactional liquidity, has been taken. And then my structural liquidity, very important. Without your structural liquidity, you don't want to jump on any trade, because you will definitely, or your protected low, or the low or the high that you think is protected, will be swept, and then you'll be used as an inducement liquidity. So that's it. I then marked out my QMR with the rectangle tool, marked it out, and the next step for me is to validate my structural liquidity if it is within the 50% area of my swing structure. And here we go. You see that the structural liquidity is within the 50% area of this whole swing structure. And what happened? I took my position tool. It's as simple as that. No complication, there's no need to complicate the whole thing. Once you have understood this pattern, it works like magic. It eases your stress and help you make good profit. Then I had my fact TP. This is my fact TP I'm actually looking at. Like I always do, 1 to 3 is enough for me, more than enough for me. 1 to 3 RR. Now we have what is known as expected TP. I am definitely expecting price to hit this target, and of course price is definitely going to hit this target since I'm on the right side of the market. We have expected TP, and then we have fact TP. This was my fact TP. This my fact TP, and you see price took out the fact TP ASAP before retracing, and then probably would continue to the upside. Now guys, this is as simple as ABC. Just with my very good understanding and knowledge on QMR and order block, I was able to take this trade. I shared it in my Telegram community, and we made money confidently and easily. Okay, it's very simple. There's no need to complicate things for yourself. Like I said, once transactional liquidity is taken, we are expecting price to retrace or correct itself back into the discount area of that swing structure. This was an incomplete mitigation. This mitigation of this order block was really not valid. It was incomplete, and of course I knew price was definitely going to come back. You see what price did. Price came back, took it off, mitigated properly up to 50% of that POI, and boom, to the upside. So it's as simple as that, guys. It's as simple as that. It's as simple as that. So this is everything you need to know about POI. POI is that point or that area that you are interested in taking your trade, and of course it has to be valid. And how do you validate your POI? Make sure it is unmitigated, that is, price has actually not reached that point of interest, and you are using it as the first mitigation. Okay, that's how to validate your POI, and with this understanding, it will definitely change your game, your trading game. I promise it's definitely going to change your trading game. I started from the weekly time frame using the order block. Okay, on this first setup, the QMR was mitigated and then the other block was used, but the second set of the QMR was still intact, has not been mitigated, okay, and it was used. Okay, so that's it, guys. If this helped clear up what POI is, or at least stopped you from marking 57 random zones, do me a favor, like, comment and subscribe to the J brand. More trading gems are on the way, so don't miss out. Until next time, mark your zones, respect liquidity, and trade like you mean it.